What's up, everyone? All right, so I'm going to do my recap here for today. DCFC up 12,800. So made back yesterday's loss. And you know, unfortunately, it was hard not to be thinking pretty much the whole morning about yesterday's loss and about trying to make it back. I started trading this fairly early. I traded it during the morning show. If you were tuning in for that, you saw I ended the morning show at around $6,000 of profit. It kept going up, and considering how much it went up, $6 a share, I really didn't do all that well on it. Green, of course, 12,000 is a great day, but I know I'm capable of doing better, and I think that's where I was a little disappointed. So on this one, let's see. So we started to break out sort of in this area here. Maybe we go back to the 5-minute chart and just look at this from yesterday. So yesterday had a high of 1190 right here. That was this candle, 1190 high. And of course, I was in not much lower than that and caught this red candle coming back down and lost 11,000 on it yesterday. So I was red yesterday. Through the rest of the day, it held up relatively well. This morning, the level that I was kind of thinking to watch was 1127, and you can see it squeezed up right there. Broke 1127, squeezed up to 1215, pulled back. So that was kind of right at that level from yesterday, and then it ripped on this candle up to 13. And that was a nice big green candle. So we had a couple of nice big green candles. I'll mark them out. We had this one from 1050 to, like 1112. So kind of like right in there. We had another one right there. Oops. We had another one right there. And then another really nice one here going into the open. Now, so those were the sort of three nicest candles. And on those three candles, I did fairly well. I don't remember on the first one, actually, if I got any of it. But this one right here, so let's now dial this into a 1-minute time frame. So 1-minute time frame back here. So look at this dip off the VWAP right on this candle. It dips to the VWAP 1150 and then just rips right through the pivot at 1195. This was a 1-minute ABCD, a 5-minute bull flag, and squeezes up to 13. Micro pullback, pops up, can't break over 13, drops, tries to pop up, false breakout again, sells off to 1227, then kind of rallies back up slowly going into the open. And then this right here, that breakaway candle, squeezed from 1280 all the way up to 1386. And I didn't size well enough on that candle to make really good money on it. But so we had, one good candle there, two good candles there, right in this area, and, a little bit right in here. So those were basically like three good candles. And then everything in between was pretty choppy. That was chop. This was chop. Not that you couldn't trade within that range, but that's never as easy as trading as it's moving quickly to new highs, dipping off the moving averages, bouncing back up, resistance, pulling back up. It was just kind of choppy. So then at the open, it pulled back, and then all of a sudden it screams through 1350 right here, halts up. So on this trade, I bought as soon as it broke the pre-market high. I got in and I sold going into the halt for like 15 cents profit, and that put me up about $8,000 on the day. I really didn't. I recognized that this was a wedge pattern that we had here, just a period of consolidation. As you can see, I can make this a little bit bolder. So I saw that, but I was just sort of like, I don't know. I mean, I just don't know if that's actually going to break out. The volume had declined quite a bit, and someone said, this is either going to break out or break down. And I said, yeah, well, it might also just go sideways because the volume has declined, and it doesn't have to break out or break down. It can just simply go sideways, just sort of volume declining. And so if you look here on the volume bars, we had high volume at the open, red candle. Volume declining, these sort of false breakouts there and there. So even though 1337, which was the price of this pivot, right here, maybe a level to watch, or this level, 1352, a level to watch, or certainly the highs. The problem with 1337 is that it flashed to that price and then came right back down. So it didn't hold up well. This was a false breakout. And so I was like, even if I just don't want to get in here and then get caught in a bull trap and have it just flush and then halt going down. So I kind of got in a little high day break, but grabbed 20 cents of profit off of it, got myself up 8,000. Then right in here, I was sort of watching for a dip and a rip, but it opened a little lower. So it halted up at 1420 and it resumed at 14. So I was like, I don't know, dip and rip, yeah, in a hot market, but I don't know, I don't want to push it. And it rips right to 1598, micro pullback right here, got long, it breaks through 16, hits a high of 1660, I'm out, and I'm at about 11,000 in profit. And then, typical me, let's see, my last trade on it, I believe it was right here on this ugly red candle. I got in right in this area for the curl, added at 1630, 1640, stopped out 1580, and gave back half my profit. It was up 5,500. At that point, I stopped and I was like, well, there you go. You've given back half your profit. And for what it's worth, that was the third time I'd done that, because earlier I was up 4,000. I think I was up 4,000 during this first move here. Then I gave back 3 grand during consolidation. Then I got myself up to 7,500. Then I gave back another 3 grand during consolidation, was up only 3,000. And then I got myself up about 75, 8,000 on this, 7,500, 8,000 on this. And then I gave back some on one of these candles, I don't remember where, and was up like 3,800, 4,800 again. And then back here, got that nice trade, was back to up 7,000, 8,000. And then right here, up 11,000, and then boom, gave back half, was up only 5,000. Then it rips up here to 1777, but then drops right back down. It didn't hold very well. So now we've got a longer period of consolidation, curling up, but a little tricky. And then right here, it starts to open up. I got back in right as it broke away, right in here. So as it started to pull away through the highs, this is where I was watching it. So long for this move up here, sold into profit up here, was up about 11,000, bought the dip down in here. It rallies back up, then it flushes. I thought it was going to break back over 1950, and I added it like I started and then I added into this level, hit 1940, and then drops back down here to a low of 1865. So gave back some gains, then it pops back up. I added back at 1938 for the break of 1940. It hits 1949, it can't break. It dips back down again, and I sold the rest of it. I was all out. Then all of a sudden, this candle, it drops from 1949 to 1718. As it dropped, I took my first stab on it at 18. Long at 18, right here. Looked like it was bouncing. Just for a second, it looked like it was bouncing. So I got long at 18, 1,500 shares. It pops up to 18.15, and then it flushes. I sold for a loss. Goes to a halt down at $17.18. Looked like it was going to halt down, and then all of a sudden it started to thin out. And as it's thinned out, I punched the buy button. Got filled at $17.18, and it sprang all the way here back up to $17.98, almost $1 a share, and that put me up there about 12,000. So this move in this area initially got me from 5,500 to 6,500, 7,500, 8,500, and then I gave back some off the top. I think I hit 11,000, then I was up only 9,000, and then this last trade was about a $3,000 winner. And that's the last trade that I took. So now it's pulling back a little bit more. The thing that's so hard, I was frustrated when I walked away wherever that was at like 10:30, and I sort of stepped back a little bit. I was frustrated. It's been tough, when you have basically, so this is a 5 minute, 1 minute, switch it to 5 minute. So basically you have 1, 2, 3, 4, 5, 6, 7. You have like 7 good, maybe 8 good green candles on this. And we're looking at the 5 minute, but even if we looked at the 1 minute, there's really only been a few solid candles. 1, 2, 3, this one right here for sure. This one right here was good. And then this one wasn't even as good. It started to pull away, but then it just couldn't really open up and go crazy. And then all of a sudden you get this big drop. So, right now it's definitely a time to just try to settle in and take your base hits. And, earlier in the day when I was up $2,800, I said, maybe I should just call it a day, $2,800. At least it's a green day. And I kept trading and I was up 4,000 and I was like, all right, I'm getting some momentum. And then boom, lost $3,000, was up only 1,000. I was annoyed. And then, rallied my way back up. I feel like I'm building a stone wall and each small win is a stone. I put, one stone on, I'm up 1,000, 2,000, 3,000, 4,000. I look away and I look back and I'm back to only 1. And I'm like, what the heck's going on here? And then, okay, all right. Rebuild, now up 2,000, 3,000, 4,000, 5,000, 6,000. I look away and now there's only 3 blocks. Now I'm at 3,000. What happened? 4, 5, 6, 7. I look away, I look back, I'm at only 1,200 or 2,500. And it's hard to continue having the patience to keep building when, you build, and then get knocked down. Build, get knocked down. And that's what's happening a lot in this market right now. My average winners are fairly small. My accuracy has been fantastic, about 70, 72%. So my accuracy is good. But what's basically happening is I have 7 small winners, relatively small winners, and then 3, medium to big size losses. And those wipe out the 7 small winners. So even though my accuracy is good, my profit loss ratio right now is bad. Why is it bad? Well, it's bad because we're not seeing really good follow through. The best trades are relatively small winners, but every trade carries risk. And when you get one that just flushes on you, it can be nasty. And honestly, I could have probably easily been holding during this candle right here and given back my entire morning and gone back to flat. I'm sure that could have happened. If I'd punched the order at 18 with, 6,000 shares instead of 1,500, I probably wouldn't have been able to exit as quickly with a bigger position. Or if I had held the whole thing until it hauled down and then averaged down to, 20,000 shares at a 1,750 average when it popped up, I don't know if I would have been able to get filled as well, to sell in profit when I had it. So, I could have easily been on the wrong side. Yesterday, I could have easily finished green, but I overtraded and got on the wrong side. It's a difficult market for sure. And so what I've kind of found, in my experience trading, of course, is that we have these periods where the market is really hot and then periods where it's cold. And right now we're certainly in a colder period. We could look at the greater market conditions here as a factor. So right now, for the last, month or so, the overall market pulled back. And although we've bounced in the last, 5 days a bit, the overall market's pulling back a little bit. That's not that different from what you saw here or what you saw back here. That doesn't necessarily correlate directly to how small caps perform, but I usually do find that small caps, they can be sensitive if they don't have a really strong catalyst, and so they'll just do better when the overall market is strong. If the overall market is weak, small caps can do okay if they have strong catalysts. But I think what we're seeing right now, sort of in the small cap market, is just a little bit less, follow through. And we can look at the IWM, which is the Russell 2000. This is a small cap ETF, so it's 2,000 small caps. So just like the S&P 500, it's not every company, but it reflects the small cap market. The thing with the IWM is that when we have stocks like DCFC or you have like a, which is over the last 2 days from 7 to 20 is phenomenal. I just wasn't able to do super well on it, which was kind of disappointing. But you look at DWAC or something like that, those probably were not stocks that were included in the IWM, so they wouldn't be factored in. But this just speaks to sort of small caps at large, although you could say that basically all of 2021 was pretty much sideways until the end of the year. It was range bound. I still had a great year in 2021. But sideways is better than pulling back. And we have been pulling back a bit here since November. Although November and December weren't that bad for me. So, I don't always know exactly how much to attribute my gains or losses to greater market conditions in the sort of index of the IWM or something like that. But I would say at the least that it's been choppy these last few weeks, and when we've seen something start to open up, there's still a bit of hesitancy. I'm still hesitant. I'm sure other traders are still a little hesitant. We see something starting to open up, but then we get a little gun shy when we see a big drop like that. So it's just we're starting to see a little action, but it doesn't go as far as I would typically expect. So something like this, I might have thought, I actually thought right in this area, I was like, okay, are we going to break away here and actually start skipping $0.50 and going like, 1950, 20, 2050, 21, 2250, 23, 24, 25? Are we going to really start to go parabolic? And we didn't. We started to open up and then we pulled back. So that's what we keep seeing. We're starting to open up and then we pull back. Not to say that this isn't a decent move from here to here, but in a hotter market, we would have seen more. And so training myself to expect less and size accordingly is very difficult, especially because the last 2 years have been so strong. I've trained myself to be very aggressive, to be, buying at the highs for that extension, for that parabolic move, for the squeeze into the halt and then the gap higher. And no doubt we'll have stocks that provide us those opportunities again. But just the last couple of weeks, we haven't seen that, certainly with consistency. And so, it's dialing it back a little bit, trying to get in, get green. And so, how many times today did I give back half my profit? And was there a point where I should have just said, you know what, enough's enough, just walk away? Yesterday, I gave back all my profit till I was up. I went from up 4,000, I think, to up only 150. And then I took this trade on DCFC and I lost 11,000 on it. And just like that, I was down, ruined my day, down 11,000 on the day. And this didn't, it didn't really, it sold off hard. And if I hadn't cut the loss, I would have been down 30,000, maybe 40. But then it slowly curled back up. I'm glad I didn't hold it, because that would have been breaking all the rules just to hold and hope. But, it did end up rallying and I made some money back today, which is good. But, even today, the move was good, but it could have been better. So this is just a time to be kind of content with trying to keep your head above water, keep yourself active in the market, keep gaining experience, try to keep working on that emotional conditioning, dealing with the FOMO. And if you can get yourself into a nice routine where you come in, you get green, or you take a couple trades and then shut it down quick, I think that's a good approach. It's 1:40 in the afternoon here. It's not my goal to be sitting in front of my computer for 8 hours a day. That's not why I became a trader. Now different people have different goals with trading, but I became a trader because I wanted to have more freedom to be able to do the things I like doing. And I didn't want to be tied down to a 9-to-5 job. And, I can't really complain. I will stay longer on a day when there's opportunity. But during a cold market, to just sit here for 8 hours a day, waiting for that one opportunity to cross, it would almost be like you're, I don't know, like you're hunting Canadian geese or something. And we all know that they migrate south. So you're sitting there in the middle of January up here in New England, you know, in your hunting shack or whatever, with your eyes peeled, looking for the one lone Canadian goose to fly by. I mean, you're not gonna catch many because they've gone south, right? So all that effort is just time wasted, and it's going to be resources wasted, not just in time, but in the ammunition and things like that. And you might end up making a mistake, and then you accidentally shoot a bald eagle, and well, now you're really in trouble. You're not supposed to do that. So I don't know, but the thing with trading is when it's hot, it pays to spend more time in the chair, and when it's cold, it actually really pays to step back, because when it's cold, this is what you start to see more. You see the panic, the fear, and you catch those flushes, and just like that, in an instant, your entire day could be gone. Entire morning of profit could be gone. And you think, man, why didn't I walk away sooner? So if you could try to get yourself in the habit of getting in early, getting green, and shutting it down, what you'll have are small days, small green days, maybe small red days, nothing big, just slow and steady, small days. Keeps your head above water, keeps you in the market. And if we start to see momentum with more consistency, you know, you'll know it, and that'll be your cue to say, all right, I gotta, you know, put a little bit more attention towards focusing on capitalizing on these opportunities. We're seeing them happening more regularly. So anyways, I've seen, you know, just in the chat room, people commenting on some doing really well today, some getting extremely frustrated. I mean, you can see the whole spectrum of people who got in early, got green, and locked it up, and people who overstayed their welcome, were holding, you know, into that flush, and that's not fun. So yeah, less is more in this market, and you know, those small days do add up. And if you can keep yourself from getting too emotionally activated during this time, that makes sense as well. I realistically, I'm a few green days away from being kind of back to my all-time highs in my P&L. So I just need to, you know, keep my head down, catch some green trades, and be here ready and willing to jump in when momentum strikes. And we got a bit of it today. You know, DCFC, it's up 82%, but no doubt, you know, it looks easy in hindsight. Oh man, you should have made $100,000 on it. But in reality, this had a lot of just sudden spiking candles, spike and then kind of choppy. Spike and then choppy. So we're not seeing sustained action. And really the 5-minute chart is a great reflection of that, because you don't see really clean bull flags. The cleanest one was this right here, and this was the one that bounced off the VWAP and then just ripped up, and even that one was really unpredictable the way it happened. All of a sudden in this candle, it hit a low of 1150 and then ripped up to 13, and it didn't give us an opportunity to, at least for me, to size up, because it was just so surprising. So that was the best one. And then this one at the open was, you know, or right before the open was okay, but it wasn't perfect. And then this one was really fast. This was the resumption, then chop, then another pop, topping tail, pulled back. And then here, you know, okay, through 1781 was decent, but even that topping tail on that candle went a little higher, and then a couple big red candles. It was not as impressive as I might have liked. But beggars can't be choosers. We got something today, we got something yesterday, and I'll be back at it tomorrow to see if we can get something else tomorrow, and, you know, finish up the week Thursday and Friday with a couple more green trades. So, you know, as of right now, I have one red day for the month of February. Otherwise, February has been all green, and this week I'm now basically, you know, break even on the week. Let's just call it break even. I was down 11,000 yesterday, or maybe 10,000, but there were fees and commissions. Today I'm up 12,800, but there's going to be fees and commissions. So I'll say I'm break even on the week, which gives me Thursday and Friday to try to, you know, catch a couple trades, finish the week green, and make it my, I guess, third consecutive week after that red week. I had 2 red weeks in mid-January. Yeah, 2 red weeks in mid-January. So this could be my 3rd consecutive week if I can trade well for the next 2 days, Thursday and Friday. So that's got to be my goal. Smaller size is important right now. The volume on DCFC is okay, but my order execution on it wasn't great. Some slippage, wasn't super easy to buy, wasn't super easy to sell. So a little tricky there, but you know, I'll be grateful when we have a little bit more volume and slightly tighter spreads, because that makes it easier to manage risk. This almost looks like an inverted head and shoulders pattern here, but I don't want to fall into a bull trap. And you know, this is the spot where maybe it does go back to 1945, 1950 and up to 20. And maybe it does it on one surprise candle and you're like, okay, didn't see that coming. But I don't want to fall into a bull trap, because I know how quickly in a candle like that, I could go from up 12,800 to flat. So I'm going to take the money off the table and come back tomorrow. Consistency is key. And consistency has been pretty good for me this month. And I'll say, as always, in case you don't already know, as I'm talking about my gains, my results are not typical. So in case you didn't know that already, I'll just say it here. My results are not typical. Most beginner traders do lose money. And as a beginner trader, you should assume you'll lose. With that assumption in mind, trade in a simulator before you put real money on the line, and take it slow. So my accuracy this month has been 72%. But the winners have been small, only $583 average winner. The loss is a little bit bigger, and I was down $2,900 on the month coming into today because of yesterday's loss, right? So, and of course, yesterday was only my 4th trading day of the month, but still, you know, was up 2,000, was up 600, was up 4,000, and then boom, that's that $10,000 loss that gives back 3.5, 4 days of profit. So glad to have made that back today. We'll mark today as the biggest green day of the month so far. And we'll try to keep the accuracy at 72%. And what I need to get better at is cutting losses quickly. I say it all the time to students, but even I need to get better at it right now. I'm holding those losers too long. I'm getting stubborn and frustrated on them instead of just cutting it. And the longer hold time resulting in bigger average losses, and it's not working, right? So I need to drop share size, which makes it easier to just be very ruthless about cutting those losses and letting them go. When you start trading with bigger size, it's hard to cut those losses quickly. You know you're going to get slippage if you just market order out, and so you figure, I'll just hold it. Let's just give it a second, and the next thing you know, you're potentially sitting on a 50-cent per share loss with some size, and that's not good. All right, so that's it for me. We'll be back at it tomorrow, and hope to see some continuation, whether it's on DCFC or something else. I don't really, doesn't really matter, I guess, but hopefully we'll see something continue. I would say that if this goes into a 3rd day, I try not to overstay my welcome too much, but the nice thing is today's volume is much higher than yesterday. So that's moving in the right direction. It is a blue sky setup. The float's a little higher. It shows here is 153 million shares. Some other people are saying it's actually closer to 22 million. These are can be kind of confusing. Look at that candle. See, look at that. Look at that. That's a 10-second candle from 1820 to 1686. You know, just over $1 a share gone. So both special acquisition companies, mergers, recent reverse splits, recent IPOs, floats can be a little confusing. You've got to go through the filings and make sure what you're looking at is correct. So it's not always super easy. I saw FinViz also has it listed at 153 million, but yeah, I think it might actually be lower. It's not trading like it's 153 million. So at the end of the day, how well it's trading is important. All right, so that's it for me. Good luck if you traded today. If you watch this and you're still trading, try to keep it green. And remember, as always, my results are not typical, so take it slow. And if you're trying to learn momentum, this is a great time to learn. It's a great time to practice. And if you can keep your head above water during choppy markets like this, that'll bode well for when things pick back up. That's a fact. But if you struggle in choppy markets, know that you're not alone. Even traders who have been doing this for a long time like me struggle during choppy markets as well. So you're not alone. We'll get through it. All right, that's it for me. I'll see you first thing tomorrow morning.
And that right there was an entire video with no ads. I don't monetize my YouTube channel with video ads, which means you guys get to enjoy the content. But do me a favor, please hit that subscribe button and give me a thumbs up and let YouTube know that this channel is the channel to watch if you want to learn about day trading.